Hello and welcome, as it is the 14th day of February 2018. Everything is within your own risk and own reward. Yesterday I put up some Fibonacci upside levels, and well, it ain't bragging if you do it and you back it up. And I don't come on here often and say, oh, I called this, I did this, I was right again. No, I don't think that's worth doing. But if you see how these numbers are playing out, each single one of them magnificently, just recently. This is the 5-minute time frame for Litecoin. As price action gets up to a major, this is the biggest Fibonacci number of the bunch right here. So this is going to be very cool to see how this plays out. Because if this level gets broken, we could have some more serious legs to the upside. But we could also stop going up for a while as well. We'll see. But it's already made a move to a very key level. We're going to go through so many different key aspects, time frames, so on and so forth. But the price comes in right down to this point here. And when markets move like this, if you can catch it, I caught a little bit. I was a little unlucky because I withdrew some Litecoin from a place, and then a few minutes later the fall happens, and I was able to sell everything else that I had, and at like 245, 246, so I was able to buy it back at 240. Because you only have a couple minutes where you can do that with the fast moving markets. I think I'd rather do that when the markets move wildly, and just try to gain like 0.1 here, like over and over and over and over and over again by doing such, rather than selling and waiting to buy back. Although I have sold a little bit at this 250 handle, not too much. I even sold a little bit at 200 handle that I don't know if I'm ever going to get back again. I hope I don't. It'd be cool if this price stays and holds above the 0.02 handle. That's most certainly major level now on any type of, well, not short term now, but intermediate, long term, and then if it gets down there, short term target. 200 will be a prestigiously large level. Because I got a whole bunch of lines on here, I'm going to take a look at this. We'll go back to the Bittrex exchange, but I'm going to take a look at this now on the Poloniex, where there's no lines on the screen. And I want to take a look at this more long term. I guess I do have a few lines on here that I scribbled in from before. I can remove them. But it's obvious. It's broken this big level. It's a clear break of it. And when you read like the video that I state, early stages of a breakout. So if you're looking forever a time to go long, if you can distinguish, does this rally on the early stages look like it has legs still? And that's the question we have to decipher right now for the more longer term time frame. Fibonacci upside. As I stated, the 250 level is huge. It's actually a hair above it, but it also did reach a hair above it as well. But fib from this high and this low gives us a price objective to 252. It already hit it. Okay. So once you get a situation where technical analysis, especially when I use Fibonacci type of analysis, not much more that I use for numbers, when you find that a price target, a price move should come, and as it was breaking out in the early stages, there was your target. Then when it happens, the play is over. It's like a now what question mark situation, because we're supposed to find resistance now. Supposed to. That doesn't mean we will, but we're supposed to. Resistance means it's going to go sideways, grind its way lower, and not most likely, but just an obvious now area which was big resistance on any retracements will now become that of big support, which also means the probability odds of any move, especially on the first price push back here, will have good likelihood that you will find support. When I say that, that means it should either follow through with the 61.8% correction from this high, or in other words, have a good gain, or at least go sideways for a significant period of time. And just what it means, a key area is it should stop going lower. So if it stops going lower, it's either got to go up or got to go sideways. It can't do anything else. So that's what it comes to within that. But there's more longer term Fibonacci upside I have to consider. For on the more longer term time frame, what I'm looking for is the rally higher, sort of like this rally higher to here, coming back down here. In this situation, we have a move coming from 003 up to 0.022, which then comes back down to 0.01. The Fibonacci upside for that level is about 3,500. So another 1,000, or another one on top of the two. Still a significant gain from here on in. So at this point, the market is telling us that it's now, it's not confirming, but it's telling us the status of such is breaking out from the 18 average of lows, breaking out from these levels of resistance, and it's now barely done so, early stages. So if you're trying to find entry points, this is always what I consider a very scary, dangerous situation if you're trying to pick away at that 35 price. Because I have no idea what's going to happen next, because I'm very confident it's going to do it. But I don't know if it's going to have any type of correctionary move, and the 18 average band is far away now. Or if it's just going to keep on going. Because if you're at an area where you're supposed to find resistance and you don't, then the warning signs, the likelihood of fast, quick moves to further accelerate becomes highly probable. And we're looking at a situation on Litecoin that has been doing that over and over and over again. Now, it didn't do it up here. So in this situation here, if this thing wasn't resistance and it kept going, we probably would have seen another massive green candle, but it was resistance. There was some resistance in here, but no, it just kept going high. But we're also talking about the failed breakdown in here that had that move, but it was really, again, like I talk about with the failed double one. But when you have that move, have this sideways consolidation, and again, you're seeing it barely breaking above. So I do like the likelihood it's going to make it, but again, I have no idea if it's going to have any kind of 20-ish, 25% correction before making a move up towards that point, or it's just going to keep on flying further to the upside, because that wouldn't surprise me either. Let's continue to look at this short term, because I do have some more Fibonacci upside targets up to that very big 35 handle. And again, we'll put the Bittrex chart in. Take a look at this on a 10-minute time frame. And if you're looking at this very short term, you can use Fib from here to here. That's what you do. So we can see it's come up to the 38.2% level. And you do what you need to do from that point on. Still showing a lot of the neutrality signs, unsure how we're going to play on this resistance field. But if it is able to get above, then you can take a look at these key numbers. This is what I've calculated. I don't have a number for a while. 286. Yes, there probably would be a key number in between, probably somewhere in the middle, but I'll be very interested. I'm going to use, again, like I did before, Fibonacci theory, and I'm using as the high end of the Fibonacci level to retrace the upside target at a little over the 3.5 handle, and the 25 handle here, as well as the low end. So this would be 38.2% from that point. So it'd be what the 23.6 would actually be that number. And let's just see, is this the numbers in here? I got 28.66. Yeah, so there'd be another number in at 27.21. So roughly around here, there could be some Fibonacci. We'll see how that plays out. But then again at the 312 handle. And then the most bigger one, which is the little over the 350 handle, as some Fibonacci upside targets as it continues forward. If this is an area of the top, and it's not a surprise to be here, that's Fibonacci doing what it's supposed to do. When you have levels that we've been using, well, that I put out, that you have seen on its first playthrough, or just, yeah, its first playthrough. It's a game as far as I'm concerned. That if it did so well before, these are now key levels again. So that can be used. So you'd be looking for key support, especially here down at the 228 handle. You'd be looking at this as a key level if it breaks down below where we are now. And even the basics of just chart analyses. You see on the last time it left the 18 average of lows in here, you come up and you make this 2 green candle push and a few red candles down, but you generally had some support in around this area. You have another leg higher. So when you come down, that's the areas you look for is where you came from. So you had the resistance here, it went through it. Then you had this support, which obviously is usually always going to coincide with a previous high. It did. So you're expecting to have that key level find support. More times than not, it will. So it's going to stop going down, basically, is when I say it's going to have support, at least for a decent enough time. So then, of course, when you're looking at that, you're like, okay, so you're looking at a key level below. You don't want to have a break below support that's tiny, like down to, like, say, here at the 232 handle. That's just too small. And you don't want to go a mile below because there's just so many different layers. Of course, we got this line in here, pierce below most certainly because of this high. So you'd be looking at about a 2.25 and so on and so forth, if of course that's the case for any retracements. Let's take a look at this against the US dollar next. And I'm not going to just start off by talking about my base strategy. And I'm not trading this against the dollar, so this is not what I'm not doing. But with the basic strategy, you sell when it gets above the 18 average of highs, and you buy when it's below it. So before all of this was going on, if we just go to a random time frame in here, oh, you're in the market, it's going sideways, you'd be selling as the market goes up $4. You can buy as it retraces down below, maybe sell up here, buy back here if you can catch any of those periods. You always want to make sure if you're playing something, especially if you're playing it heavy with a lot of position size, that if a big move like this, because you're expecting major moves like this, that okay, you can sell some at previous high, say at around 4 and change, then you sell some around 6, maybe you sell some around 7 and change, maybe 9 and change, maybe again here, and you could have been able to sell more if it would have not went down, but maybe you bought back here, there's that more that you needed to sell. And in situations of this nature, this is where if something goes straight up like this, then you might lose a little bit in the sense that you're going to lose out on some profits for people who just continuously hold. But there's nothing wrong in the event of taking profits, and there is always opportunities to be available to get back into the market. So within this here, we can see that any type of buybacks became very difficult as the price was rising above it, which is why I love doing the strategy more against Bitcoin, because it's more apt to chop back up and down. That's what the strategy is designed more for, not for markets that go straight up, because you lose position sizes and just buying and holding for the long term works out to be the better play. It definitely doesn't work for markets that go straight down because you lose. But markets that are able to have any type of good choppy movements. And that really didn't have as many as it made its first move into 2017. It did mean that any and all selling on the last leg higher in here, when it got above $60 in 2017, was easily bought back because it came back down to 30-ish. So that was easy to buy back. But everything sold before was just too difficult. But even in the situation when you have sales that you can make up here around 65, when you have the market back in this area, at some point you're buying back at 53, gain of like 20%. It's the best you're getting at that point. And the market has its huge move back end of last year. So it's had a good correction. That's something it hasn't had too much of. So because of that, this could be very interesting based on it's gained a lot of fuel, and of course that's what can help drive it. But it's also meant playing that strategy that everything that was sold up here, you'll be able to get back, or you would have been able to get back down here and buy. Now everything you've bought, you have been able to we'll start selling now. Now I've just realized I've lost all the Fibonacci lines that I've made, but thankfully I can always rewind my tape video and get them back. But there's most likely I will not have them be up for the morning. So those numbers that I had, check them out, see how well they do, and thank you for tuning in. I'm not actually don't want to finish this video yet. Is there really much more to talk about? Because I did go over basically what no, this is against the dollar. I was looking at this and thinking, where are my Fibonacci lines? I could do Fibonacci here, so let's do it. I mean, yeah, I mean, I'm not done my video. Remove all drawing tools. So here we have a spot where we have this high. I'm going to have to count this at about 365. And it comes back down to 109. This is going to give me a Fibonacci upside target. It's also going to give me the key numbers in between. And 365, 110 will work. Upside target 700, well, even 800 bucks, because it usually pierces extra. So that'd be an interesting number to see what happens, which is not the psychological 1,000 by any means. But quite frankly, a lot of times you'll see something like that. It might go to the 1,000 and then settle in at around 750, and that's where it just chops around as either support, resistance, or both. And the key numbers in here, 174 and 231. Well, we're at that 231 area now. So we take a look at this at a more shorter term time frame, 400-minute time frame. 171 was this area of resistance in here, so it was perfect, a perfect area. Comes back down, and on this next test, it breaks a huge move higher. So now it's at that key level. So like I stated before, you're at an area where you're supposed to stop going higher. Okay, well, stop going higher, Litecoin. You're supposed to do it. If you obey, well then, again, you're either going to go down and test some lower areas, or you're going to go sideways and just stop going up. But if the market doesn't obey, welcome to the sprint, basically. Okay, now let's go back to the Litecoin. I was looking at my charts before with the dollar. I'm thinking, where are my bigger lines? I don't want to put them back in. In fact, what I should do is find the lock all drawing tools on this. There we go. That should stop me from hopefully deleting them or anything else. Okay, so here we have technical analysis doing what it's supposed to do. You come down here, you stopped going lower. You had a price correction up to the 18 average. you are back down here again, which now gives you cautionary signs that a fall may occur down towards this level. This also means that because this is a major resistance level, we've already had a little bit of fight from the bears on this current battle as I'm doing this, that any rallies that happen may occur now may not get above this resistance level. In fact, after a key high, it's not uncommon that it makes a matching high or a lower high before it reverts to a 1, 2, 3, or however many legs lower it may have. And of course, I'm talking about short-term analysis within such, but the short-term is now playing the long-term game. Because if this does retrace like it's supposed to, and we fill in a few of these Fibonacci lines, well, the long term, it's just having a small correction as it's on its way, of course, towards the 350 handle on here. All right, so, I could be doing stuff like, I could be doing like trading, like lesson videos, charging whatever amount, but I like doing it on here, a good way for people to be able to learn basically for free. And I'm not the type of person that's going to put out all these different types of, oh, buy this, buy here now. And very rarely, whether a play is a winner or a loser, I'm going to go back too much and reflect on it, other than for purposes on, well, learning from, because of just building up your history. Of course, that does come naturally to me at this stage, but that's always important when you look back at your history, not to be too impressed and excited and just so pumped up you were right or pissed off you were wrong, because there's going to be times when you were wrong but you were right, but you were unlucky. That's going to happen. And it's all about, okay, yep, that's how maybe I wanted to interpret it. It got done, done well. Now where can I make my next profitable play? And that's what you're always looking for, is to basically make some sort of crypto trade of whatever sort that's going to give you good net profit. Okay. Then I'm going to end this. I was going to do a whole bunch of different cryptos. Maybe Komodo, because Komodo just had an interesting pop recently. So yeah, let's take a look at Komodo. It's like a bonus chart. Oh, 58 even now. Sweet. I seen it go up to 54. Okay. And even go up to 59, 50, 60. When cryptos go, they go. See, I'm in a business where I try to arbitrage just like a boss, and I do. Sometimes you win, sometimes you lose. And that means what I'm liking to do is sell for higher than I buy, or sell 30, buy 35, buy 40, depending on what kind of gain back. Although sometimes what happens is you have like a sell order right around here to buy it back down here, and then the thing just keeps going higher. Meaning I sold some at around 50 that I can't get back now. But I hardly sold any. I have a large position on this because that's what I can do, is just continuously buy and sell for profit. And it's a game. How many can I get without having to really buy anymore, as far as paying extra into it? If I can sell a product or anything and buy it back at the same price, then I'm going to get back more. And the more volume I do, the more I'm going to get back. So the game is how many of these coins can I accumulate? And then within the game, when you have an opportunity to dump them big. And I'm going to show you my big mistake from last year after I'm done focusing on the short-term analysis here. Major amount of support here. And like, you can never tell when these things were going to go. This was stated in WebBot on the December 25th report to go in late January. So this was, to me, a code which was neither correct for its time, but it never really was a losing play either, because it never really broke down. And it can still be correct as far as, okay, well, the timing was a bit off. And then, of course, more things, and it's just, this is just a good coin to have. So there's no way I was selling any just to exit out of the position. It was decently sized, but it wasn't major by any means. Price action has now gotten above this 18 average, just barely at this stage. The band is, or price action has already been going sideways, albeit in a declining 18 average. Therefore, this resistance level at around 50, 51, if it's not going to go up yet, would be a big area. I'd like to see it hold as support, which was the previous area, which was resistance. If it can go up further, then it would be establishing a level of resistance. It would also be strengthening what you'd rather have as support, which is closer to 52 to 54 as the resistance levels of its highest peak areas. So the mistake in which I made before, and it wasn't that big of a mistake, I don't think. I'm just looking back. When did I make the play? It would have been not taking some off the table in here. I'm trying to think if it was in June where I was making my dough or if it was in August. I have to think it was in June. No. It was in August. Nope, I didn't make a mistake. I thought my mistake was I didn't take enough off the table. And basically what I'd be doing is the game, like I state, is to just accumulate as many of these as I can. But when price action gets somewhere up here where I'm seeing like in the 007, then I'm probably going to want to liquidate about 3/4 of what I have and just keep playing the game. And then if the price goes way back down, I'll buy them back. So that's how I'm going to play the game, very aggressively based on the position size, but it's, to me, a mathematical safe way of playing while limiting your risk and exposing your reward for large profits. But yeah, Komodo should be, I mean, I don't follow the fundamentals, rather the technicals and Cliff High's information, but within Cliff High's information, what is really awesome about it is you get to situations where you're like, man, something looks like it's ready to do something which WebBot is kind of supporting, and it makes it cool and awesome when what he says coincides with the technical analysis that I talk about. When I take a look at the Bitcoin chart, and I even just look at things like the high, like 13,800 number on here, and I take a look at this on the weekly time frame, and I see this 18 average of highs roughly at that exact same number. Well, that's kind of cool as far as I'm concerned, because I use that as like a major reflection key point. And I realized getting up there, that's where if the market was quote unquote to bubble on Bitcoin and we're at a top we're not going to see for quite some time, then any rally should come up to about this area at the most and then fall over. But if it doesn't go down much or at all from that point, and you see price breaking above it, holding, staying above, and then lifting off any or showing any bullish short-term patterns above the 14,000 number, then you know it's off to the races, because quite frankly 14,000 is a massive number. Let's finish this off within the key Fibonacci numbers on Bitcoin. We have a high in at around, you just do even numbers and you're good to go. It went up to 20,000, it pretty much went down to 6. So the key numbers are 12,000, 9,500, the 76.4 is 15. So even 12,000 and change. So even breaking out past that point. Now I'm going to say 14,000, that works out to what I want to see it hold and break above, because even this area of support in here, that most certainly is, well, it's 12.4. Either way, they're pretty much around the same number. It's just that's the upper end towards it. 13,800 coincides with, well, you figure it's this previous level of support, but it's the upper band of what you would call this support, with the lower area being, well, if you use multiple hits, 11,750. This is now a long video, a lot of good information again. So I'll be in touch with you again tomorrow. Take care.